Hi, how's it going everyone? So the oil prices have surged over 10% within the last few days to over $110 per barrel for crude oil. Now this is the highest priced since around 2011 at the moment. Now this could spell disaster in terms of economics for the entire world, and everyone is going to be affected. If we look at the monthly chart for crude oil, currently we're sitting at around the $113 per barrel for the US crude oil. And last time it was around that area is back around April of 2011. And that is more than 10 years ago. Now, all of this is, of course, due to Russia's recent aggressions. The US and many European countries have carried out many sanctions towards Russia, pretty much barring the selling of all Russian goods. The majority of Russian banks have also been locked out from the international bank messaging system, which is also known as the SWIFT system. Now, this is a system that many people use when sending international bank transfers. Now, this caused a crash in the value of the Russian ruble to one of the lowest at 117 rubles per US dollar. Now, this is an all-time low for the Russian rubles to US dollars. One sector that wasn't sanctioned was the energy sector, but traders are unsurprisingly staying away from Russian oil due to all of the uncertainties that's going on. Some of the largest oil companies such as BP, Shell, and ExxonMobil have planned on leaving their operations in Russia, now leaving behind billions of dollars worth of assets. So Russia, if you didn't know already, is one of the top 3 producers of oil in the world. The top place currently belongs to the US, and the second being Saudi Arabia, and Russia sits pretty comfortably at third. With higher oil prices, we can expect, of course, higher inflation. Yep, I know we're all sick of hearing that word again, but yes, prices are going to go up, even more expensive for everything again. Currently, inflation in New Zealand sits at around 5.9% according to a report back in January. And the inflation in the US is at around 7.5%. Now, in the short term, these figures might easily get even higher. Not only would the cost to fill up at the pumps be more expensive, travel costs will be more expensive, the cost of goods is expected to increase, cost of air travel is expected to increase, cost of shipping, production, everything is expected to increase. So it's not just the price at the pumps that's expected to get more expensive. Oil is used in production in many everyday items, and one of the biggest one of them is plastic. The increase in the cost of plastic could directly affect the cost of everyday items. And for people that are already struggling, this feels almost like a repeat of the year 2020. And that's why we call this year the year 2020 Part 2. So what does this actually mean when it comes to investment? Now, due to inflation, each dollar that you have will have much less purchasing power. Now, to get every dollar that you have to go further, now this might mean a fundamental shift in terms of lifestyle. In terms of investing, you can't let the fluctuation of the markets shake you out of the market, because the real test that you pay for when it comes to investing and earning a passive income through investing is how well you can deal with risks and uncertainties. Volatility is the price that you have to pay for making long-term investments, and that's why it's such an important idea when it comes to investing is having a margin of safety. Now, you need to have enough margin of safety so that you can weather the choppy markets. The legendary investor Warren Buffett didn't simply make tons of money because he's just good at buying and holding companies. He's known as one of the best investors of all time because he has enough margin of safety with his investments so that even when the markets drop 20 or 30%, he doesn't need to sell off his assets at a loss. And he's been consistently doing that for more than 50 years. Now, this is the importance of risk management. So you can have a different person that takes on high risk and buy these high risk assets such as the small companies, penny stocks or altcoins or NFTs or whatever they want out there. And they can make a ton of money in a very short amount of time. But when there is a downturn in the market, they're forced to sell out of their position due to taking on too much debt. And you simply cannot build your wealth long-term in that way. Short-term wise, it may definitely work, but it simply does not work well long-term. So think about the long term, build up your margin of safety, have at least a few months of living costs in terms of savings, and don't panic sell your assets when the market starts dropping, and we'll all be able to weather the storm.